Hey everyone, welcome to Beach Investing. I'm your host Andrei Angelkovski. We're back with Jordan Weinberg, our chartered accountant. How are you, Jordan?
Good, you?
Good, thanks. So what we're going to be talking to you about today is for you investors out there who are looking to buy, whether it's pre-built condos, resale condos, and whether you're looking to rent them out, flip them, and expect to only pay capital gains tax. Well, think again and be careful because the CRA is cracking down, and that's why we have Jordan here to explain what he's noticing lately and what the CRA is actually doing. So, Jordan.
So, what we've been seeing a lot lately is, and we never actually saw this very commonly before, is letters have been coming in from our clients, where the CRA either requests more information on a condo transaction, or they're actually reassessing them on a condo transaction, turning what would be a capital gain, as reported, to business income.
So business income versus capital gains, the difference.
Right.
What's the difference?
So a capital gain is essentially only half as taxable. So if you own the property personally, and say your effective tax rate that you personally pay is 30%, on a capital gain you pay 15%. So the difference for a large gain is actually quite significant. And so we've been seeing a lot of activity, so definitely the CRA is starting to catch on with all the condo flipping and speculation, and they're actually going out and just reassessing, saying, hey, this isn't a capital gain, you were in the business of flipping, and they're assessing it as business income, which is quite a punitive tax credit of a capital gain. And unlike, in the judicial system, where you're innocent until proven guilty, a lot of times the CRA will just reassess you, and then you have a certain number of days to fight it. So it kind of sucks, but in a certain way you just have to be aware that this is happening out there. They are challenging this a lot, and they're definitely looking at the condo market. We've seen week after week more and more letters come in. So generally speaking, if you're worried about it before you sell your condo, talk to your accountant. They can usually let you know what the potential tax implication is. If you've gotten a letter, bring it to your accountant or your tax lawyer, and they can look at it, and because there often is time periods involved with responding. So just be aware that the CRA isn't as lax as they used to be on this sort of these sort of transactions.
Which is can be concerning for certain investors because they just feel that they can get away with just capital gains, right?
A lot of people, the CRA is a little gung-ho, and they can easily defend the capital gain and maybe just take some documentation and some contact with them. But for other people, for speculators or for certain individuals that are routinely involved in this sort of business, they might not have such an easy time defending it if the CRA is already looking at it. So it's just something to keep in mind and to plan accordingly with, either to fight it or if you get such a letter, or to pay the tax if you can't get out of it.
All right, and if anyone has any questions on this matter, can they give you a call?
Anytime, of course.
Awesome. Thank you, Jordan.
Thank you.
All right.